Hey everybody, welcome to the morning market briefing. It's Thursday, April 30th, 2026. Thomas, first time back in the saddle in a while. How you guys been?
Just crushing it. No big deal.
I mean, the views are through the roof.
We've been having a very powerful week. Smash that subscribe button. We're about to get to 200 subscribers. It's pretty good because we've only been doing the YouTube part of this for, I guess almost exactly 4 months because it's April 30th. But a lot of traction there. Welcome to the new folks. Andrew usually hosts the podcast, so welcome. This is a whole new face for you, so welcome to that.
Yeah, we'll see if you still like it. I met a bunch of active listeners. I don't know if they're super users. I don't know how many of them are watching live, but a bunch. One at a charity event last Friday. Local guy who was like, "Hey, I love the podcast," so that was cool. And then I was over in Birmingham with a bunch of folks. We had a cocktail hour with folks that work at another firm, and a bunch of them are listeners. I wouldn't say that fellow advisors are necessarily the target audience, but it seems like we've really carved out a niche there.
I mean, Hicks and I were going through the analytics. We are big in California now.
Watch out.
They are second in total watch time for the year, which I don't know who those people would be because we'd have a handful of clients that live in California, but I don't think they typically listen to the call. So
No.
Welcome to you guys.
Yeah.
Sorry for how terrible your life is, but enjoy the beach and the mountains.
We didn't do it. We just talked about it.
Yeah.
The Fed. We had Powell's last meeting as chair yesterday. Tom, any big takeaways?
I think everyone was trying to make a lot out of a little yesterday. There were 4 dissents, notably. So we had Stephen Moran in classic fashion. He dissented and opted instead to say that they should have cut rates by a quarter point, which is to be expected, I think, with him in there. The interesting piece is I think you're starting to see a little bit of a flip in the bird to Kevin Warsh prior to him getting in, and it's from some of the biggest weenies on the Fed. So Neil Kashkari, Beth Hammack, and Lori Logan all dissented, but they were in support of not doing anything, but also wanted to have a more neutral statement and not having any easing language in there. Though I would say if you go through the red line, I wouldn't say there's any overtly easing language in it, but that was their sort of like, we're fine with not doing anything, but we're just staunchly against the idea that we would do anything. There's a lot of chatter about, this is the first time we've had 4 dissents since 1992. And it's like, well, technically you had 3 people who were on board, but just wanted different language and 1 guy who dissented, really.
Yeah.
It appears that Jay Powell is going to depart pretty smoothly. I think there was a lot made out of that as well. He notably ended his press conference with, I won't see you next time, and then walked off. So I would expect that at least to anticipate that Kevin Warsh is going to get in and everything's going to move smoothly and we're just going to move on. But the reaction was a little bit strong on the short end. We saw a little bit of selling on the 2-year. We don't see in futures any cuts in there really at all, but I would still say the ball game's about to change. We're going to get a new head of the Fed in there, and it seems he's going to be clashing heads at least with 3 of the existing members, and you've got Stephen Moran, of course, who is ready to just cut rates to 0. So we'll see how it goes, but I would say there was a lot made out of nothing. I would say rates are mostly up because of the war in Iran and the potentiality of higher short-term oil prices, and the long end is going to be much more affected by that.
Thomas, we've got a story from the White House blocking Mythos and the expansion of that. Can you explain that to me like I'm a 5-year-old?
Yeah, so Claude Mythos is the newest model released by Anthropic. There was a lot of cyber attack security issues going on with this new model, so they basically gave it to a lot of your financial institutions, the government, a lot of big tech companies to kind of prepare them for the wrath of cybersecurity that this model can bring on them. So now the White House is, attempting to block more, just disapproving Mythos expanding its access from 50 to 70, I think it was, to 120 entities now, citing fears that the model's cyber attacks pose more security risks. I would say that the White House is probably just a little bit more anti-Anthropic rather than caring about the security risks of said model. That's what I'm taking away from that. And then on the addition side to the White House, Google has signed a deal to provide AI for the classified Pentagon operations. So the White House was sort of all the way on board with Anthropic. had that falling out when it came to like automated weaponry and mass surveillance. So now it's going to be Google, OpenAI, and XAI supporting the national security side of the White House. So there's been some internal backlash on Google, kind of being like, we probably shouldn't be.
Yeah, we don't like this.
We don't like this, but it's kind of like, I don't know. They don't really have a say in this.
Yeah, it kind of is what it is. Tom, you alluded to this earlier, but the Iran war just continuing to kind of drag on. We have seen oil hitting a wartime high, which I kind of felt like was a possibility when we started the blockade.
Yeah. I mean, it's maximum pressure, and what I like about it is that Scott Besson tweets about it repeatedly and has been on the record saying that it's working. He's also been cracking down on their ability to use Bitcoin, basically just turning the vice on Iran. They're going to have to do something. They're going to devastate their long-term economic value if they don't. Now, you could argue you're dealing with the people who aren't necessarily interested in
long-term
success or human life, and so that's maybe not their prerogative. But eventually, they're going to end up in a position where they can't do anything. It's going to be real hard to enrich uranium when you have absolutely zero money because you capture oil wells, and you've had all your infrastructure blown up. So we'll see what happens over the next couple of days. But the time is really running out. Trump indicated they may start doing some shortwave strikes, more targeted bombing to put a little bit more pressure in addition to the blockade. So we'll see how it goes. But it's definitely, I think we're reaching the fever pitch now. Iran's got to do something. They've got to make a decision.
And this is a subtle piece of negotiated leverage, but also the notion that, hey, we're not flying over there to negotiate anymore.
Yeah,
I think
it's time for them to tap out.
Yep.
They've been submitted.
Lots going on in Japan. Top currency officials issuing a final warning to speculators as the yen slips yet again. Thomas, what's that mean to people at home?
Well, Tom could probably explain this better than I can, but basically the yen is weakening, and a big trade for a lot of funds is like the Japanese carry trade. So oftentimes people have a lot of money behind this and get liquidated very quickly when big changes are made to the yen.
Yeah, this is a constant sort of.
It's always in the back.
Watch out, the Japanese carry trade is coming, but. I mean, they've had super low rates for a very long time, so people borrow money in yen and they buy U.S. stocks and bonds, and they make a spread there. And if you start to see that collapse, you can see a lot of people essentially selling those stocks and bonds and covering their losses on the yen side. And so, I don't know. This has been something that people have talked about a zillion times, and I mean, if it happens, it happens. But I don't think that it's nearly the size that people think it is, and if anything, it's just going to lead to insanely high rates in Japan, and that's a real problem for them, more so than it is for us, because, I mean, they're an exporting nation above everything, and so they need their goods and services to be bought, and they have, 300 or something debt to GDP, so that becomes a real problem as well. So we'll see. Could it ultimately lead to a massive financial collapse worldwide? Yeah, sure. It certainly could, but
it's not the first time we're bringing this up.
Yeah, this is like the third or fourth time that this is definitely going to happen in the last 5 years. So, I don't know. We'll see.
Google up 7%, Thomas.
Yeah.
Very powerful numbers.
Very powerful numbers. All the big dogs reported last night, so we can kind of get into that. Google, I'd say, definitely had the best quarter out of all of them. Revenue up 22%. This is 11 straight quarters of double-digit growth, but not necessarily just overall growth. They're sort of just firing on all cylinders. So a lot of people were saying that, AI is coming. Everyone's going to be using ChatGPT. No one's going to be using search. Search is up 19% this quarter to $60 billion. They're killing it on YouTube. They're killing it on search. Their cloud revenue was up 63%, doubling their margins too. And then on Waymo and Gemini as well, you're seeing significant growth. So I think Google absolutely killed it this quarter.
I think we talked about it like a year ago where Chamath Palihapitiya on his podcast is basically like Google could dominate the space if they just spent 5 minutes reorganizing
asking
the search
people
page.
what they want.
Yeah, and they did that, and it seems to have worked, because at first it was like you got to go to the AI thing and you got to type it in and you got to go to Gemini. Now it pretty much defaults to that. If you search in Google, you almost always now get the AI driven response.
He talked about just switching it from an opt-in to an opt-out.
Yeah, and it seems that they've basically done that, and turns out that was a pretty good idea.
Yeah, and then they also just released a like finance platform. So Perplexity Finance is kind of the big finance platform right now, and they just released their new beta of their new finance platform, and I checked it out this morning, and it is really good. It's the Gemini integration is much better than the Perplexity one, in my opinion.
Nice. Amazon up 3%, seeing revenue up 17% year over year.
They're killing it, man. Amazon, AWS is accelerating 28%. A lot of people were concerned that I think this is the biggest growth they've had since they were maybe like half the size back when they started. And they're also doing a lot with their new Gravitron chip. So they kind of hyped this up a little bit in the months leading up to earnings. But a lot of demand for the Trainium and Gravitron chips as well.
We got Microsoft taking a little bit of a beat down, but Meta down big time, down 9%.
Meta's down big. They actually had a really good quarter. I think that people are just
haters,
and the
CapEx number.
The CapEx number is big, but it's not like, I mean, you got to expect Mark Zuckerberg, especially with the new data center and how high memory prices have been. I mean, I thought that we were going to see a beaten guide across the board for all these on CapEx guidance, but yeah, I thought they had a really strong quarter, strong advertising off of pretty difficult comps, pretty good engagement, pretty good impressions, but just totally sold off from raising the CapEx guidance from 125 to 145 billion. In my opinion, this is more of people seeing the success of Amazon and Google and being like, man, I'm a little scared of the CapEx. On Meta's side, they're growing revenue a little bit slower, and they have a lot less business lines that are growing. Might as well put my money there. I think this might be a good opportunity for.
We talked about that, I think, when we did the Meta number last time, that when they said just 125 on the CapEx, which they've since pushed up, that on a relative basis, Amazon's CapEx has grown to a huge number, but relative to what they've done historically is not that big. But Meta's is, and I think that's the concern for people, is it's like you go from 30 billion to 145 billion, that's huge. But if you go from like 90 to 125 to 150, that's just sort of, stepwise change as opposed to a massive hyperbolic change.
Yeah.
More earnings coming through today, Thomas. What's top of mind for you?
None of these are in my coverage, but we got the International Continental Exchange, L3 Harris. On the health side, we have Merck and Eli Lilly. Sai, which is a trucking company. Valero, Integris.
Caterpillar came out this morning, I think. They're up, I think, 7 or 8%.
Yeah, they've been really
it.
Big cats.
They've had an insane year, too. They're probably up like 140% this year. And then
35.
Apple's the big dog.
Yeah, it's going to be, we're going to basically, most of the S&P 500 will be covered by the end of today.
Yep.
If you include all the stuff that happened yesterday and happens this afternoon, and we'll basically have what constitutes the market, we'll have reported earnings by the end of day today. So lots of moving parts, but it's interesting that the big movers are way up and the big movers are way down. You're not seeing Microsoft is sort of a wet fart because it's only down 2%, but everything else is just, it's either up huge or down huge. Yeah. So, Caterpillar, which is an all-time boring company, is up 7% pre-market. I don't think I've ever seen that kind of pre-market action from them. But to your point, they're up 162% in the last calendar year.
In the last year, not year to date.
But it'll be 42-ish at the open, which is pretty good for a
4-month run.
10% a month is strong, and we own plenty of cat, which I don't hate.
Yep. All right. Good stuff. We'll wrap it up there. Hope you guys have a great day. We'll talk to you tomorrow.